FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today's 1/22/19. Hey, this year's really starting off with a bang. Well, we don't need to get into the political news. We try to avoid that like the plague. Anyway, we just ask you, if you want to be part of the show, to email us, kl@kerrylutz.com. That's the email address. We answer all. If it's a great question or comment, we will read it on the show. Within the next week or so, I've got about 30 or 40 questions stocked up. I'm going to do a couple of shows just answering your questions, or at least answering them or addressing them as best I can. So, we're into real estate here. We've been doing real estate since I was in my late teens, and it's just probably one of the best ways available, regardless what your age, to build wealth without a lot of risk if you do it right. And when it works, it's a beautiful thing. And Mark Ferguson is with us now. Mark, you are almost a millennium and almost a Gen Xer. They call you tweeners or something like that. And your website is Invest for More, and that's FOURMORE.com. And it's great to have you on the show.
Oh, I'm great to be on the show, Kerry. I'm looking forward to it and excited to share some knowledge.
Yeah, well, that's what it's all about here because, look, we're now in what I call the new economy. For the past 10 years, we've been in the new economy, but things are changing now very rapidly. And you can't afford to be left behind, because if you don't have a strategy going ahead for success, then you are going to be subject to the vicissitudes, the whirlpool of fate. So you got to start thinking about these things. And I see you've been a licensed real estate agent and investor since 2002. Your father was a realtor and an investor before that. So real estate really is your life.
It is. And I grew up wanting nothing to do with it. I was around it my whole life and went to college, got a finance degree, and couldn't really find a perfect job. So I thought I'd get into real estate part-time, and then it ballooned into where I'm at now. So glad it happened that way, but it wasn't the plan.
and this happens a lot in life. You kind of reject what your parents are doing, and basically you look and you find your own way, and then all of a sudden you make the brilliant discovery, hey, my parents weren't so dumb after all.
Yep, exactly.
Yeah. So hey, so what are you doing now? Just to tell us what your recent history has been. I know you've written 5 books. You're on your 6th now. That's a pretty formidable task. But you've been doing flips and such. Just tell us what's going on.
Yeah. So last year we did 26 flips, and those were full rehabs. I've bought 20 rental properties over the last 8-9 years now. Just started a real estate brokerage in 2018. So getting that up and running, nothing big, just kind of a small, local, comfortable brokerage. And then, I have my blog, investformore.com, which kind of talks about everything I do, my rentals, my flips, being an agent, being a broker. And the books go over that as well, just trying to help people, educate them about the business, why I think real estate is one of the most fantastic ways for the average person to get ahead in life.
Yeah, for sure. So looking at the market now, we had the bottom of the recession, which kind of was 2010-11, and then things have steadily progressed up from there. We've seen some remarkable appreciation in real estate, and we've seen that inventory is short in many markets and prices are very high. Is there still opportunity in real estate?
I think there's always opportunity in real estate, but at the same time, you have to be very careful. So I know a lot of people talk about being careful now because the market might change and being really, sure about your investments. And my strategy has always been to invest that way, no matter what the market is. I don't ever want to not be careful. But with the flipping, we flipped with my dad. I first started with him through the last crash, before, after, and during. And you just have to make sure your numbers are there. There's plenty of room for profit for things that come up, and you're in and out quick. The rental properties are kind of the same way. Rentals don't always crash if the market crashes as far as the rent coming in. Sometimes they even go up because there's more renters. But as long as you hold on to the properties, you have plenty of reserves, you're in a good financial position, and you don't have to sell those properties, you should be okay. And so while it's tough now to buy rentals because prices are so high, we've kind of switched from buying residential properties to commercial properties. And we found more opportunity there. And there's also more opportunity in different parts of the country. So we're in Colorado where prices are crazy.
Yeah, sure.
And I stopped buying rentals. Yeah, I stopped buying rentals here in 2015 because they got so crazy. But then we moved to commercial and have bought 6 properties in the last 2 years. So there's always opportunity. It's just finding it and being careful about how you invest.
Yeah, that's what it's all about. So you obviously you follow a formula of some sort, right? So what is your formula for success here?
Well, as far as just the real estate, we always want to see kind of a $30,000 profit on our flips, that range. And we're buying houses from $150,000 to $250,000 usually. On the rentals, I'm always looking to get at least kind of a 15% cash on cash return is what I look for. But then everything I buy below market value. I always want a 20 to 30% discount on whatever I buy, which also helps protect you if things go downhill. And as far as formula for life, I think one of the best quotes I ever heard was, work on yourself more than you work on your business. You really have to concentrate on learning, seeing a broad overview of the business and not getting stuck too far inside your business doing all the work.
Yeah. So you got to learn to delegate, and you got to have a certain measure of trust in order to delegate. And that's why many of you out there find it very difficult to delegate for sure. So looking at the market, obviously in 2011, 2012, if you had the guts, you could have made a killing because prices were so beat down and the market had just so contracted. So, and, we have these cycles, right? Starts low, goes high, and eventually the cycle goes around again, whether it's a recession that causes it or whether prices just get too high and then the market kind of shrinks because the available buyers in the market just aren't there because the price has outstripped them. Where do you see us being in the current cycle? Are we getting close to the peak, or is there still more to come?
It's so hard to say. You probably heard me sigh because it's a hard question.
Yeah.
Before the last crash, I think a lot of people in the industry had never, we've never really had a crash that bad, unless you go back almost to the Depression.
Yeah, sure.
And we, as in the industry, and we're just everybody's asking themselves, what are the banks doing? Like, we just understand they're lending 120% on houses, giving investors 100% loans. And it didn't make any sense. And a few years later, we found out it really didn't make any sense what they were doing. They didn't know what they're doing either. So we could kind of see what happened last time is really bad loans, a lot of loans that pushed tons of new construction and overbuilding, and everything just fell down. Mm-hmm. This time around, it's so different because lending guidelines are still very strict for investors, for homeowners, nothing like it was back then. They're still building houses at a slower rate than the national average has been over the last 50 years. There's a huge peak in the early 2000s for house building. And then when the crash happened, it dropped down to record low building for almost 4 or 5 years. And it still hasn't gotten back up to average. And that's why there's no inventory. There just aren't enough houses. So, based on that data, I would say we're not going to see a crash, but because prices have gone up so high, I could definitely see it steadying. I could see a slight pullback here soon because of affordability. But then there's always factors like the economy and, what happens if the government shut down for a year? So there's so much going on. And if I had to put, say this is what's going to happen, I'd say I could see a pullback. I don't see a crash, but nobody will ever know for sure until it happens.
Yeah. So the market's still feeling the effects effectively of what happened during the so-called Great Recession, and And that, to some extent, is dictating where we're heading then. And so the inventory, in a lot of places, there's still inventory still held by banks, so-called shadow inventory. Do you think some of that's going to be coming onto the market at some point?
FSN Radio. It's all about what's next.
Egypt is on the verge, once again, becoming a world-renowned gold producer. The golden age is being rediscovered. For millennia, ancient Egyptian kingdoms prospered from unparalleled riches. Pharaohs built their empires and flaunted their abundant wealth that was made possible by the country's resource-rich gold deposits. Despite this rich history, modern Egypt remains one of the most underdeveloped gold mining countries in the world. Aton Resources is at the center of the modern Egyptian mining world, diligently working both as the only public exploration company in Egypt today and as the advocate for mining reform with the Egyptian government. However, those that arrive early like Aton will reap the best rewards. Aton's discovery of the legendary Lost Mountain of Gold at Rodruin and its current aggressive drilling program there could potentially reap those rewards. Aton Resources is focused on its 100% owned Abu Marawat concession in the Arabian-Nubian Shield, located 200 kilometers north of Centamin Sakari's world-class gold mine. Aton possesses first-mover advantage in the underfollowed jurisdiction of Egypt, which is currently undergoing mining reform. To stay on top of Aton's latest drill results and news, go to atonresources.com. Aton trades on the Toronto Venture Exchange under the ticker AAN and on the OTC under the ticker ANLBF.
The Financial Survival Network. It's all about what's next.
That's interesting because I don't do it anymore, but 2007 to 2012, I was an REO broker. So I sold foreclosures for banks. I sold 200 houses a year, a few years in a row. And the reason I stopped is because there's no foreclosures in Colorado anymore. There simply isn't any business there.
Right.
But I'd go to conferences all the time, shadow inventory was talked about for years. It's this tsunami that was building up and would just, double dip the housing market and see it crash again. And it never came. And I think it depends on what market you're in. But here, the biggest factor was prices increased so much that those properties that were in foreclosure, people could sell them or they could they could get out from under there. And from the statistics I've seen, that shadow inventory was never quite as great as they said it was. And I don't think we'll see a huge rush of new foreclosures coming on unless the economy sinks and the market sinks.
Hey, that's pretty interesting. I never quite heard it analyzed in that way before, but what you're saying is totally logical and makes complete sense that, it was a media event more than an event that happened in reality, right?
I think so. I think there were definitely shadow foreclosures. There were banks who didn't want to rush the market.
Yeah.
There was all the robo-signing, illegal foreclosures happening. So there was shadow inventory, but the banks worked through it. Like they don't want to hold dead assets for 10 years. They don't want to be, they don't want to be real estate investors. They want to lend money and keep their money moving. So, unless it's just complete negligence, which we saw with some big banks I won't name, but they got rid of their inventory.
Yeah. So it really, that phenomena was much ado about pretty much nothing because the market did come back. Because in Lee County, Florida, houses selling at the peak, $250,000. A month later, they're in foreclosure and they're selling for $65,000. So probably the price of that home is close to the real value, $175,000 to $200,000. But because you had this huge market disruption, it went way below. So the prices effectively, I guess I'm saying, had no place to go but up.
Right. And yeah, if you look at the historic graphs of the median price values, even though we've had this huge push up in a lot of markets, it's still not that high above the historic averages because we had such a huge dip. I think it's a little higher now, but it's not like, it was a lot bigger rise in the 2000s than there was now.
Yeah,
for sure, because it was a lot lower price point going to a higher price point, and we've had 20 years now to for pricing prices we should have seen.
Yeah, and not to mention, since the crash, we've had 10 years of inflation. So inflation-adjusted prices are still well below their peak, all except for select markets like places you and I don't even hazard. New York City, Miami, downtown Miami I'm talking about, L.A., San Francisco, Bay Area. Yeah, they're trading higher than ever. But what about the new tax law? What's your take on it? Both personally and from a business standpoint?
Personally, I mean, it's going to save me a lot of money as an investor. I'm, obviously not an accountant or an expert, but from what I've heard from my accountant and different people, because we have a lot of our business set up in corporations, because I own a lot of rental properties, it will save us money because of the corporate tax deductions they have now. And, a lot of the rental property restrictions they're thinking of putting in place never got passed. So there wasn't a whole lot bad with it for real estate people, and quite a bit of good.
Yeah, but then we look at the flip side for these high tax jurisdictions, high tax states with both high income tax and high real estate taxes. I'm talking like the Northeast, New Jersey, New York, Connecticut, Massachusetts, or Taxachusetts, as they call it, Illinois, California, potentially devastating to the working upper middle class. It's a devastating blow for many of you out there, isn't it?
That's true with the limit on their, I forgot what they called it, but the SALT deductions.
State and local tax.
Mm-hmm.
Yeah.
So that does definitely hurt people. So yeah, I mean, it's like I said, for the real estate investor, it's great, but for the everyday person, might not help them very much. Yeah,
and you might see a swing to higher rents for higher quality properties. So for many higher end properties, they rent effectively at a discount to valuation compared to the lower and middle income quality housing, which actually rents at a higher percentage of its value than, say, a mansion in Beverly Hills. So maybe we'll see these higher end properties, more of them become rentals, and we'll see the actual rents on them go higher, because the incentive to own your own home on the higher end has definitely been diminished greatly in higher tax states.
It's interesting. I've never thought of about that, but you could be right there.
Yeah, well, it's just an observation, and time will tell. It's a question of whether home ownership is so ingrained into the American psyche that it really overrides economics, economic sense. And I think this is going to be an interesting time to figure that out. Hey, looking at areas of the country, so I take it you'll go outside of Colorado for a good opportunity?
I would, but really right now, all of my flipping is within 40 miles of where I live. And all of my rentals, except one, are within 10 miles of me. So I really like investing locally. And one of the biggest advantages is because I'm an agent broker, I save money on commissions.
Sure.
I have access to the MLS. It's such a huge advantage that I don't want to give that up to invest out of state.
I can totally understand that. It makes a lot of sense. So you help people do what you've done, basically, right? On your site there, and investformore.com. That's FOURMORE.com. So that's what you do. You're helping other people kind of realize the American dream.
Yeah, I try to. And the name, because when I first bought rental properties, I had a couple, and then the bank stopped lending to me, the big banks, because I had 4 mortgages in my name.
Yeah, you had the
and so that's where it kind
FHA limit.
Yep. And so I figured out how to get more mortgages with local lenders, and that's where the name came from, Invest for More. I was getting more than 4 mortgages. So I started talking about how I was getting more financing, what kind of properties I bought, how I got good deals on them. And then that exploded into the flipping side, where I started talking about our flips, the repairs, finding contractors, finding lending, how to sell them, all kinds of different stuff. And we talk about the agent side, how to become a successful agent, if it's worth it to be an agent, if the industry is changing, all of that stuff. And just tried to write about as much as I could. And I had no clue what I was doing when I started. Just started a blog on a whim, and it kind of ballooned into something a lot bigger than I thought it would be. And wrote books from there, did a podcast for a short while. And my main goal is just to educate people on how awesome real estate is.
Hey, well, you're doing a great job, and you're leading by example, which is really a wonderful thing. Hey, aside from the website, we find you Twitter, Facebook. Where else can we find you?
Yep, at Invest for More on Twitter. I'm there with the Invest for and More. I'll capitalize the IFM. Facebook, we have a Facebook group, the Invest for More Real Estate Investing group. Invest for More page on Facebook as well. Instagram at Invest for More. YouTube, just search for Invest for More, Mark Ferguson, and you'll find our YouTube. I think we're up over 35,000 subscribers now. So try to put out at least 2 videos a week, either on advice or showing our properties, the rehabs, finished products, all of that stuff.
All right. Well, hey, it sounds like exciting times ahead. It sounds like you're really well prepared and situated for the future, whatever it may hold. Anyways, we have a link in the show notes to Mark's site, Invest for More, and that's FOUREMORE, investformore.com. And hey, any questions or comments, just send us an email, kl@kerrylutz.com. The Twitter feed's at Kerry Lutz, Facebook page, Financial Survival Network. Hey, if you're watching this on YouTube or listening to the podcast, why not subscribe, like, and share it? It really helps me a lot when you do that. Really helps get the message out about the show, helps broaden our audience, and helps us just bring you much better material in the future. Mark, been a real pleasure having you on the show. Wish you the best of luck, and we will definitely talk to you again soon.
Thanks a lot. Love being on it and appreciate it.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.